How do you think through like the political incentives on the Fed? I mean, obviously inflation's been a huge issue. It's been like the number one issue for Americans, and heading into midterms, I think that it's playing a role in maybe why the Fed has been so aggressive. But at the same time, it seems like if they continue raising rates so aggressively, they're going to send us into a recession, which is even worse. Well, in my opinion, I guess you could make an argument for inflation being worse, but how do you kind of think through those political incentives, especially as we head into midterms at the end of the year, and kind of this barbell? On the one end, you have the potential for inflation running away, and then on the other hand, you have the potential for a deep recession if they don't kind of walk this tightrope correctly.
I think people are still kidding themselves that there's like an easy way out of this. It's like, all this inflation's bad. If only they raise rates, we can get back to normal. And whereas like no, as you point out, you pretty much you kind of swing back between inflation and recession. That's the problem when you have supply side limitations. So if there's just not enough oil, for example, your choice is either high inflation or reduced demand for oil through decreased economic activity, which people hate. And usually, a recession is more acutely painful for people than inflation, but it depends on what your specific situation is in life, right? If you're retired, living on fixed income, you'd probably rather have a recession than have inflation because you're more impacted by inflation than a recession. Whereas if you're trying to get a job, maybe the recession is worse than inflation, right? So different constituents might have different views, and because most people are not very focused on economic details. They all they look at is prices are higher at the pump. My wages, despite the fact that they went up less than inflation, right? So I can buy less gasoline, I can buy less food with my wages, and so when you have that kind of stagflationary environment, it's really bad for political incumbents, and so I think that that is going to affect the midterm, and I don't think they have a good choice. They can either, let inflation run hot, or they can try to decrease demand, and either way, it's bad for reelection. And there's a measure called the Misery Index, and it measures unemployment and inflation. And so it's kind of like if you use that framework, no matter what you do, the misery index is going to be high. If you have low unemployment but high inflation, that's bad. If you have moderate inflation, moderate unemployment, that's bad. If you have low inflation but high unemployment, that's bad. And really, the only way to have low unemployment and low inflation is to have a lot of supply abundance, right? So you need to clear out malinvestment and have better investment in supply side things, and that's not really happening right now.
Yeah, for sure. And like, what do you think about the kind of end game for the Fed? Like, do you think kind of all roads, and this is like one thing that Preston's been saying, like kind of all roads lead to yield curve control in the end? And like, how do you kind of think through the array of potential outcomes for kind of the end game for the Fed?
I think all roads lead to eventually having to turn dovish despite high inflation. And that could take the form of yield curve control. That could take the form of, just not hiking rates when they were, as much as they were thinking they were going to. Kind of like how in late 2018, they were forced to pivot. And I think they're going to eventually be forced to pivot again, with the difference being that inflation will still be notable, either in terms of the official CPI or in terms of, official inflation plus shortages. And so I think the end game is basically having to provide liquidity into a still high inflationary environment. And that's kind of a balance of payments problems. That's a highly stagflationary type of scenario. And I think that's kind of the quote unquote end game for this particular long-term debt cycle.
Do you think that would be where you'd really just see a massive markup in BTC theoretically, given everyone kind of saw the playbook from March 2020 and what kind of rallied first off the lows and what rallied the most aggressive throughout the year? Do you think if you did see some type of dovish pivot, that would be kind of the green light for people to just pile into BTC?
You would think so. Markets have a tendency to surprise, but logically, yes. If you were to see the Fed kind of capitulate in terms of the ability to tighten, while inflation, while currency is still being diluted, I think you can see things like, you know, Bitcoin, gold, silver, all these different kind of like quote unquote hard monies would have their moment in the sun. And where you can see that decouple, so a number of equities would also do pretty well in that environment. Ones that are maybe doing fine in terms of fundamentals, but their valuations are pressured, I think those would also have a similar jump up. The ones that would still struggle are ones whose business operations are directly impaired by the stagflation. So either they have Chinese supply chains, or they're having trouble raising prices as fast as they have to raise wages to attract the right type of workers. And so that's where you can see a decoupling, not just say Bitcoin versus stocks, but the specific things. So specific types of assets and specific types of stocks versus other stocks that are more pressured. So I do think that that would be, you know, essentially a risk on condition, at least for segments of the market. Basically, right now, when you're tightening rates, and you're tightening rates into a slowdown, right? So if they were tightening rates when we had an economic boom, that's not necessarily bad for asset prices. But when you have PMI rolling over and they're still trying to tighten into that because of their mandate, that's when you basically have the dollar go up and everything else go down, or just about everything else go down. And maybe some things like healthcare stocks go down less than other assets, but most things that are not super defensive struggle when the Fed is trying to tighten policy into economic weakness. And so when you do have that pivot, I think you can see the dollar cool off, and you can see a bounce in a number of things that are not directly impacted by supply chain problems and chain problems and wage growth and things like that.
Makes a lot of sense. Lyn, the last thing I wanted to ask you before we wrap up is kind of a non-market specific question, more of a personal question, I guess you could say. It's just the fact that, you have such a wide, not only, breadth of understanding of topics, but depth in each of those individual topics that you have a breadth of understanding on. How do you kind of like manage your time to conduct all your research, and like how do you manage, I guess, your work drive? Obviously, you're doing what you enjoy, but how do you manage that with kind of life quality and able to sustain this deep level of research across such a wide variety of topics throughout markets every day?
Yeah, the number one thing, as you alluded to, is passion, to like what you're doing, so it never feels like work. You're just super interested to see what's going to happen next. And so I think that's the number one thing. As for work-life balance, that has been my struggle for the past few years, just because we've had this unprecedented macro environment. So first it was figuring out what's going to happen with the economy and the pandemic. Then it was spooling up on Bitcoin technical details and things like that while dealing with a challenging macro environment. And so it's kind of like drinking from the fire hose of all these different things. And so, I have not had the best work-life balance. I think a lot of people probably have not in this particular environment. But I think at the end of the day, it's kind of focusing on priorities. And for me, the hardest part is not finding time to write articles and stuff. It's dealing with emails. It's dealing with when you reach kind of a high level of publicity, managing that can be challenging, even though it's obviously rewarding because you're happy that you're touching multiple people's lives. But everybody has a natural bandwidth problem. You can only have so much bandwidth, and so that admittedly has been a challenge in the past couple years.
For sure. Lyn, thank you so much for your time. I learned a lot today, and I'm sure our audience will get an extreme amount of value out of this. Is there any kind of last words you want to leave our Bitcoin holders with as we kind of head into this unprecedented macro environment and some sour price action from BTC?
So I think the key thing is to make sure that your asset mix matches what your financial goals and your psychology is, right? So, I've for a while recommended some degree of diversification, and that means I'm still overweight things that I'm structurally bullish on, like Bitcoin. But basically, when you have some, say, cash on the sidelines, you have other investments. I have, dividend paying stocks, real estate, things like that. It makes these types of environments a lot less mentally stressful, and it means you can basically take the opportunity to buy some cheap sats, right? So now that can pay off if someone's like 100% Bitcoin. Obviously, the diversified approach would underperform that in the long run. But in terms of your ability to ride that very volatile horse is increased. So you can stay on when you have your risk and volatility budget that makes sense for you. And so I would just say, make sure you know what you own, make sure you have it in the allocation that makes sense to you, and then focus on the fundamentals. Focus on, whatever asset you're looking at. This is Bitcoin and crypto channel. So it's like, if I was talking about stocks, I would say make sure you understand what's happening with operations, right? If we're talking about Bitcoin, it's make sure you understand the fundamentals. Why is Bitcoin different from other tokens? Why, what is going on structurally with Bitcoin? What are the technical details in terms of potential soft forks or client updates, things like that. Makes you understand the fundamental details, because the more you understand the underlying, the more you can withstand different levels of price volatility.